Hey all, Tom Weller here from forexreviews.info. This is part two of the price action trader's mindset. And in this video, what I'm going to do is I'm going to go over basically entry rules, where to lock in, and where roughly you want to take profit based on your risk reward. And I thought a perfect example for showing you this, I'm just going to show you a few good, qualified trades on the GBP New Zealand that appeared over the last few days, and this is exactly what you want to be looking for based on the first video as well. Looking to the left, looking at the evidence. Now I'm going to leave that link here for that video just right now, just to show you guys that if you haven't watched the first video, you need to go watch that just to understand what I mean by looking for the evidence. Okay, so first of all, what I'm going to do is I'm going to just jump over the daily chart. Now this works on all time frames, guys, all time frames. Okay. You can trade this way. However, you'll find I find that it works really well on the 15-minute chart. Okay, so I'm going to look at my bias, how it actually works, based on your risk, and you can use this, like I said, on any time frame. You'll probably find that you'll get less trades on the higher time frames, and you'll get less entries on the high time frames, just because you won't find qualified signals very often. Okay, so anyway, first of all, let's look at the daily bias. Like I said in the forecast, and I'd said to you guys about a week ago, and also a couple, the forecast yesterday, as I said, this is a buy zone. Wait for pullbacks and buy into it. Okay, so let's look at this on the 15-minute chart now. Okay, and I will allow it to scroll to the present time. Then I'll allow it to pull back. Just bear with me for a second, guys. Now let's look for some qualified signals that happened after this. Now this is the evidence, as mentioned in the first video. You're looking for the evidence to begin with. And as you can see, we had a pullback to this support zone at 190.90 around here, and we did get an engulfing candle. So we did get the price action. So where would you place your stop? Well, you got two options. You can place your stop below the previous low for a large stop, or you can place your stop below below that actual candle. Considering this is a bit of a big move down to here, I would just place the stop below the candle, giving it a little bit of room. Okay, like as an example, if we place the stop below here, that would mean that you're risking about 64 pips, and the when the risk is excessive, you can just risk based on the candle entry. Okay, that's a little tip. Up to you if you guys want to do that. That's what I find. You'll probably get more losses doing it, but at the same time you'll get your risk reward will always be in alignment, so it doesn't matter if you get a few more losses than usual. Okay, so basically we've gotten the evidence. We know that this is a buy zone around here. We've gotten some price action. We would enter after the candle, right? And we want to, you're probably now wondering, okay, so we know where a stop is. The stop is about 30 pips, including the spread, right? Now you want to probably know, where do I lock in? Well, you lock in just past the candle entry body, which is about 22 pips. We do want to account for spread as well. So let's say about 25 pips. So we would lock in about here. So I'll put that on the chart. And anywhere from up around this area, let's have a look at this. We know it's 30 pips. Yes, anywhere from about here on, right, you set your alarms. Anywhere from about here on, you are able to take profit because you're allowed to take profit because it's basically a more than a one-to-one. Okay? So it's as simple as that. That's basically what you're looking at. Now, you can also just keep your break even. If the market is like powering along, you can just keep your break even in play, and you will occasionally, if you hold on to break evens, you will occasionally have retests. The market is constantly ebbing up and down, guys, all the time. So sometimes you'll get a retest, it'll hit your break even, then the market might go on your way again. Okay, let's have a look for another entry. Okay, so that was a good one-to-one. All right. Now your exit could have been anywhere from here up, based on the one-to-one. Actually, it's actually a little bit less. It's like about here. Okay. Yeah, it's actually a little bit even lower. Okay, it doesn't really matter. Anyway, the point, you guys are getting what my point is. If you look to the left, you see that this was a previous high here as the market was ebbing down to this support structure zone. Okay, we had another entry here. Your stop would go in the same place because it's so close, right? So you may as well have your stop in the same place. Your entry would be just above the candle entry, which was this nice engulfing pushing up here. Nice strong engulfing pushing up. And by the way, that guys, sometimes these can form really, really quick at these support structure zones. Oh, that's going to have to do for the moment. And we're risking about 30, bit over 30 pips. The body to the on this one, because you see how it's so small. It's only like 8 pips or whatever the body. So I would actually do a lock in around this zone, probably about 15 plus the spread. You're looking at about 20 pips. You would lock in. As you can see, you might have been able to go to break even here, which would have meant it was a break even trade. It looks a little bit tight to me. Oh, yeah, maybe. I think this is an example of a break even trade. So you'd locked in around here. Price came back straight after you'd locked in, or even locked in around here. Oh no, price didn't come back until here, and then bam, hits your break even. That happens. Okay, so there were some really good qualified trades just there. So basically, in a nutshell, what I'm doing, and I'll just show you another one here, based on these rules as well. Here's another one right here. Now we're not near the support zone. We didn't have a pullback to the support zone after here, but we did get a breakout of the highs and a close above on this candle just up here. So you could enter on this candle, place your stop below the high break entry, okay, giving a little bit of pip movement, and then you want to hold on. That's your entry. You would break even about here, and let's have a look. 34. Yep, that's about right. Your risk is 35. 44 entry, and as you can see, it's a bit over a 1-to-1 on that trade. So you could have taken profit anywhere around up here. And if you had just held onto your break even and allowed it to come back, you would have been break even to get on this one. This is what I'm trying to say is anything over a 1-to-1 is okay to take on a pair. What you want to be doing is you want to be allowing the market to tell you whether to get in or out. As an example, and I'll show you that right now in a nutshell, when the price came up to your 1-to-1 level, which is right here, you could, instead of having to take profit here, you could pull your stop up here, right? Your stop loss on your trade to this number. And so what you're doing is you're allowing the market to move. All right, pull your stop just below. See how these bullish candles are forming here? Let me zoom in a bit so you can see it a little bit more in detail. Okay, so you see the big bullish candles are trying to push it higher, and maybe it would have gone there, but you knew that if it broke below this level, then you'd be stopped out. Now, this is a 1-to-1, so you would have been stopped out at a 1-to-1 level, so you made a 1-to-1 profit. So that's a good little, way of allowing the market to move, letting the market decide whether you're wrong or not. Or decide to get out. And as you can see, it would have pulled back exactly to roughly where your break even is, and this is very common because this is the strong candle entry, that would become support next time it came around, and then that became support. That candle entry became support next time it came around, and the list keeps going on over and over and over again. And as you can see, is with this chart, we've been, ever since that support zone, we've been given a nice trendline bullish movement pattern, trendline channel. As you can see that the market's been respecting, and this is very, very common from structure areas. You look to the left, you see the structure being supported and respected, and then as the price bounces up, the market sort of ebbs and flows as people are taking profit and entering again. And that's how the market generally, and that's how you can also look for structure as well in the market. Okay, so that covers the basics of that. And if you guys have any questions, just feel free to comment below. Like I said, Some of this aspects of this video goes over many aspects that I went over when trading the significant candle in my significant candle video. So if you guys want to go over and watch that as well, you'll get some more ideas there. As you can see, the GBP New Zealand gave some nice bullish opportunities, and like I said, you want to be looking at the structure. You also want to be looking at what the candles are saying, and also it's about the money management. Like I said, you know, where to put break even, where to go for your take profit minimum, where to just lock in and basically lock in your break even. You know, sometimes the market might just keep rallying, and this can happen. Let's have a look at an example of where we got a trade opportunity just here, and the market just kept going. Got a nice buy signal just here. In fact, both these were quite nice, these bullish candles here, and you see you've got a bit of a pin bar, and we also got a bit of an engulfing here. Now that, you know, you would have been at break even about here. As you can see, the market did pull back, but it didn't pull back to your break even. The market did go higher, so you could have gotten, if you held a break even trade here, you could have gotten a reward of over 100 pips on this trade quite easily, with a risk of you put your stop below the previous low, as I mentioned in other previous videos, about 70, a bit over 70 pips. So basically 2 to 1, yeah, 2 to 1 on this trade you could have gotten. And as you can see, we're now getting into that structure area on the daily, that grey zone where some possibly a bigger pullback's going to happen, or possibly we'll get another trend move down lower. You never know. We could go all the way back up to retest the highs here. However, this is an area to watch now, where you can watch for bearish price action from this level. Look for evidence, like I said. Ooh, that just something in. Look for evidence. Look for weakness. Say we'll get a pullback to here, and then maybe possibly a retest up here. Then we can get some bearish price action here. Then we could take a sell opportunity from here. And like I said, you place your stop below the previous high, or if the high is a bit too far away, you just place it above the candle entry, giving a little bit of room for if you're wrong, and then you aim for break even at a 1-to-1 based on the signal, and you try and go for at least 1-to-1 or more based on the candles. And so basically, this is basically going over what you can do on the 15-minute chart. This can also, guys, I'll just show you right now, because I've been showing you guys a lot of trade management of trading the 15-minute chart, but I do actually trade other time frames as well. This actually does work on any time frame. As you can see, we got the pullback here on this pair. We also got a pullback here, so we had 2 pullbacks. Let's zoom in a bit so we can have a look at this. We had multiple pullbacks at this zone where price kept going. Now see, as an example, right, if we entered a trade here, you're risking about 40 pips. Now, a bit over 40 pips. Now, if you did place your stop below this low, you'd be risking about 80 pips. As you can see, we never even got to 1-to-1 on here until about here. So this is where you'd be break evening on that trade. And as you can see, putting break even on that trade, you'd be putting it about here. So your break even would be you would put your stop above the entry, which is about here. As you can see, we nearly got stopped out around these zones. Almost. This would be your entry on this candle. If you entered on this candle, right? And as the market's ebbing and flows, sometimes you do get break evens. That's just part of what happens in arranging markets. So this is at least 50 pips, which would have been break evened here at 50 pips, and you would have been stopped out here if you just held your break even open, hoping for it to go higher. Okay, so that's on the 1 hour. Okay, as you can see, this entry here didn't get break evened, but this one did, so basically depending on what trade you took there to the management. And you know, like I said, if you didn't put break even there, you could have just gone for a 1-to-1, and each of these did give a 1-to-1 risk reward, even on the 1 hour. Okay, So let's have a look at that quickly as an overrun quickly as well. Just over 40 pips. We got, so we didn't get over 40 pips here, so it wouldn't have been break even. We got just over 40 pips here, 50 pips here, so we could have got now 1-to-1 there. On this trade here, all right, no break even until around here, but also the break even level on this one was basically the risk level as well, so you could have taken profit around the top area here as well on this trade for a 1-to-1 risk reward. So that's showing it on the 1 hour. Let's now have a look at this on the 4 hour, just to show that you can do this on any time frame, guys, and then we'll have a look at the daily. Okay, so here we go. This is the 4 hour. So let's see if do we get any price action signals? Yes, we did. We got a price action signal right here. Okay. On the 4 hour, right there. And now if you're wondering where do you place your stop? You place your stop at the previous low, which is right here. Now, if you want to be less conservative and you want to place it right below the low, let me get rid of this. You can place it right here. You have two options for a stop in the way I see it. You stop here, you've got the candle entry here, okay, and you would enter basically here. Well, you put your order here, like for after this signal, and guess what? The price never went higher, so you wouldn't actually have been filled on this one, okay? Not in the next candle or the next candle. You would have, if you kept your order open for a few candles, you would have been filled on this one. So let's say that happened. This is the candle entry. This is the candle signal. Price meanders a little bit lower. You got filled just around here on a break above this candle. So you got filled here. You took your stop was here, so you've got a stop of either, you've got two options of your stop. This is for the 4 hour, either 140 pips, or 150 pips adding the spread, or about 110 pips adding your spread on if you just put your stop there. So, all right, so candle entry is 68 pips. Let's round it up to 70. So around 70 pips we would lock in at break even. So we lock in at break even about here, right? About that level. Yeah, about 70, just over 70 pips. We'd lock in at break even, and then we're aiming for at least 1-to-1 to the risk. So if it's here, that's 110, which was achieved on this candle right here. Actually, it was achieved easily. Actually, a little bit more. And basically, you can set your alarms for when it gets to past 1-to-1 manually, and you can set your alarms by just going right-click, trading, alert, right? So you're locked in down here, right? Where is it? Let's have a look. So your entry is right here. Oh no, you're locked in there, and basically past that, you're locked in, and that's also your risk reward. That's also your oh no, sorry, your break even is around here. Sorry, to the body signal entry. Break even's about here, and your and your 1-to-1 is around here. So anywhere beyond here is just extra pips, guys. So, and as an example, if you just took it to the end of this candle, let's have a look at this. That would have been 110 pips on that trade. I mean, or just to the end of this candle, 133 pips. So it's a bit over 1-to-1. Now, if you did hold and you kept it above break even, and you just kept it just at break even, you could have targeted, and this is what I do commonly, guys, by the way. You could easily just go, okay, well, the market's moved a good bit in my favor. We could get some pullbacks, but I'm not expecting it to come back to my price. You just put your take profit here. You keep your break even. You can put a couple of pips above your break even, like 5 or 6 pips, just in case it does come back. You still get 5 or 6 pips. And you just target the next zone, which is right here. And just on a previous trade that I just did recently on this, that I just closed, like literally just a few hours ago, I actually closed it at just below 194, just to make sure I got filled, about here. Okay, so, and as you can see, entry from here to here, to that level where I just got out, where I just showed you where I got out. That's about 200 pips, just over 200 pips. your break even around here, your 1-to-1 was here, just over 200 pips. That means that you've gotten, with your 100 pip risk, that's basically a 2-to-1. With your, let's have a look at this last one. If you put your stop here, then it's just under a 2-to-1. Either way, good risk reward there on the H4, and just showing you how you can trade it on the high time frames. Okay, let's go to the daily now. I'll show you how to do this on the daily as well. Like I said, this works on all time frames, guys. Okay, so the daily, where would you got in a candle? Okay, this is pretty obvious, guys. So let's have a look at this. This is not an entry candle. This is not an entry candle. This is an entry candle, right? So we've got the bullish engulfing. Okay, now this is where risk reward becomes a little bit different on the daily. Okay, because it's the daily, it's much harder to get a 1-to-1 risk reward. Okay, so this is how your trade goes, right? You would enter a trade at the end of this candle. So let's pull this up as an example of the entry, right? Your stop would go below the low, or as a second option, below the candle. Okay? Now, as you can see, that's really big stop, guys. So let's have a look at that. It's a 200 pip stop for the smaller one, and it's a 276 pip stop for the daily, for the larger one, below the complete low. And you basically be aiming for the next structure zone, which is basically 100 pips. So basically, it's for this daily signal, it would be and it would basically be, if you just took profit at the 194 area, you'd be getting half the reward to the risk, which is a little bit out of whack, and I don't like that sort of signal. I don't like that feeling. I don't think that that's very good, you know, especially if you're getting a success ratio of, say, 60-70% out of your trading strategy. Then getting a bad risk reward can not be, it can make you lose a lot of money. So when you get situations that are like this, you can either risk less amounts on leverage or in units, or you can not take you can sometimes not take the trade if the risk reward doesn't line up to what you like, which in this circumstance didn't line up exactly the way I liked. Or you can do another option, which is you lock in your trade really early, much more earlier than the actual rules imply. You lock in the trade at about 60 pips or 70 pips as the market's heading in your direction. At the same time, either way, you're going to have a high risk amount, like I said, over 200 pips, and that's not sort of the way I like to trade. Okay. Now this can be traded also on the weekly. Same rules again, guys. In order to go for, except your risk level is going to get higher and higher and higher, depending on which pair you're trading, of course, guys. So overall, as you can see that this actually can work on all different time frames. Now I'll jump back to one more time frame just to show you. Let's have a look at one more time frame, and then I'll wrap up this video. Otherwise, this video will end up going for a bit too long. Okay, so I'm going to drop down to the 30-minute chart, but some people like to trade the 30-minute chart. Okay, let's see if we can see any good signals here. Now we had a confirmed bottom here. I just want to show you guys that this works on all time frames. I'm not going to go low on the 15-minute chart, guys, though. Okay, I like the 15-minute chart. Okay, so we got this good signal here. As you can see, the risk was about 36 pips. So your break even would be about, what's your risk of the candle? Oh, I hadn't pulled it back. Just give me a sec. Okay, so this is a good signal. Look to the left, we've got the evidence of the support structure being respected. And so that we know that if price comes back to here, we're most likely going to get a bounce. You can place your stop below the signal, or you can place it below the previous low. However, placing below the signal is probably more recommended, because this can actually a bit more risk to actually go for. The choice is yours, though. So the candle risk is just over 30 pips, so you'd be break even about here. Okay, now the reward is not much further, so whether or not you got to your risk reward target on that trade, you could have been break evened on that, or you could have just gotten a little bit less than the 1-to-1 risk reward. Okay, do we get any other signals? We had a bit of a pullback here, but this is not a great signal here, guys. Bit of a pullback here. Didn't go all the way down to the lines that I'd drawn from this previous line. Now, if you're wondering where I draw these lines from, I usually draw them from the H4 or the daily, like for these support zones when they actually bounce. Okay, so when I look at, okay, so this is the daily where it bounced above, but what I did is I actually drew this one from, oh, that happened again, hold on. As you can see, the bottoms in here, so I knew that if it came back to the bottoms, that would be the support zone. And as you can see, the support zone goes all the way down to here, so I've got a bit of comfort zone to know where I can actually buy in if I see some good bullish price action. Okay, well, thanks for watching, guys. I hope you guys understand a little bit more about locking in, where to place your stop, where to take profit. Of course, if you've got more questions, feel free to comment below. Feel free to like this video as well. All likes and all comments are appreciated, guys. Like I said, I'm not able to answer every single comment, but I do appreciate them all. I try to read them all. And like I said, I do read them. Okay, so overall, it all comes back down to basic money management with this sort of, technique. Every trade's a little bit different. How much you risk and how much your reward is, and depending on what time frame. And yeah, so that's basically it in a nutshell, guys. Like I said, I went over similar sort of stuff on this with my significant candle trading method. So if you guys want to go and check that video out, if you haven't watched that yet, you can go check that out. We'll get rid of this one. This one's from one of those signals on the daily. Okay, I'll leave this on the daily, as you can see. Okay, so I'm just trying to think if there's anything else. Okay, so yeah, that's basically it in a nutshell, guys. Like I said, you guys can ask any questions if you've got any more questions. And yeah, thanks for watching, guys, and have a great rest of the day.